If you don't buy stocks when they look absolutely terrible, you will never buy a bargain.
With new scary headlines coming out every day and the markets continually reacting, right now the pressure is definitely on for retail investors.
Markets like this is how you really 10x your money.
It's something Jovine with Behind the Markets has personally experienced every time those bear market drops come over the past 30 years.
When the market started to crack, I remember it was 80 to 50, and it goes down to 20, and then bang! When the market turned around, just a year later, it was way above what I paid for it.
He says right now is a time other retail investors can do the exact same thing. And he's sharing 3 stock picks with a strong future that are trading at a significant discount right now.
That is literally like getting to buy $1 for 50 cents.
It's why the buys you make right now could completely transform your financial future. Let's dive in. Dylan, so great to have you back on the show today during one of the craziest months the market has ever seen. So much volatility right now, a lot of scary headlines right now, but you have a little bit of a different outlook than a lot of the negativity that we've been seeing.
Yeah, there have been a lot of scary headlines, and it's interesting. All bear markets have all have scary headlines. It's a very interesting thing. 2009 bear market. It was the worst crisis since the Great Depression. COVID, the world's going to come to an end. The virus is going to take over the world. The dot-com crash. So, scary headlines are there. And what I try to do in situations is I try to keep in mind that I really try to break the world down into 2 columns when I'm seeing things like this. Things I can control and things I can't control. The things that I can't control are, a trade war. I can't control what the Fed's going to do. I can't control if the market's going up or down. I can't control any of that stuff. What I can control is how I react to all those things. So what I try to do is when I see all these scary headlines, I try to be mindful that scary headlines are a sign of cheap stock prices. They are always, you don't get cheap stock prices without getting scary headlines. They kind of go hand in hand.
Yeah, so you can absolutely look at this in a positive way. And Dylan is going to share a list of 3 stocks that are really cheap right now and very solid companies, no matter what is going on in the market. We're going to get to those in a minute, but I want to talk a little bit more about how investors can view this market downturn instead of just having fear. But I first want to address the fear too, and that is people are losing real money, especially those who might already be in retirement, who are living off of those funds that they've been investing for years. To see them go down can be scary, right?
Yeah, no doubt about it. Yeah, it is scary. It can be scary. I take for granted sometimes that I've owned a firm, that I've been doing this for 35 years, that I've studied the history books, and that basically the same cycles repeat themselves, that what is happening now has happened so many times before. And if you look at a chart of the Dow Jones over the last 100 years, you see there's World War I, World War II, you see that the nuclear weapon, you see the Vietnam War, Nixon taking us off the gold standard, all these things, and the chart just keeps going higher. You don't want to bet against American business. American business is going to do fine over time, and that means your portfolio is going to do fine over time. But it helps me to remember the context of all these kinds of things.
I think the context is a really good point. And looking back at history, like you said, we've continued to see this time and time again. And that's why seasoned investors like yourself and even investors like Warren Buffett tend to view these down markets, these bear markets, as opportunities. Share a little bit more about your view on the market and maybe how it compares to what Warren Buffett thinks about the market right now.
Well, Warren Buffett says a bear market is an investor's best friend. And he is so right about that. Because because you get a chance to buy all those stocks that you've wanted to buy for years and years and years. How many stocks have you sat on the sidelines watching and they just keep going higher and higher and higher and higher? You never got involved. You never were able to buy them. They were always too expensive. All those years. Well, the great thing about a bear market is you get to buy them all cheap. It's like your grocery store selling everything 50% off, or going to Target and seeing everything's 50% off. You get to buy really good stuff at really cheap prices. And that doesn't come along very often. As a matter of fact, during my career, a bear market's happened once every 4.8 years. You could almost set your watch to it, really. And the 2020 bear market happened, and here we are, a real crack in stock prices. And here we are, and it's 2025. So, it happens systematically. Another thing I'd like to share with your viewers is one of the great things, when it comes to analyzing companies, we don't have much of an advantage, generally speaking, unless you have a lot of experience. Institutional investors do the same math as we do. We could all analyze and value companies. The big advantage isn't there. What I've experienced, having met many of these big shot investors, is the biggest advantage we have is an emotional advantage. We can keep our cool when things go bad. That is so important to people who have money invested in the stock market. Just keeping your cool, understanding the history of it, understanding that these things go up. Don't bet against American business. Not to sell out in the middle of a panic. Just to keep your cool, to keep a longer term perspective, and you're going to do just fine.
That's a really positive outlook to have, and leads us right into your list of stocks to look at right now that are really cheap stocks for really good companies that maybe even 6 months ago, as a retail investor, you wouldn't have been able to afford, but now might be a good time for you to actually get in. So let's get to your first stock pick, Dylan, of a company that's a solid company trading at quite a discount right now.
Yeah, that's Meta Platforms. I mean, just a few weeks ago, this thing looked like it was going to go to $800 a share. Now it's about $500 a share. So it's kind of great. And if you look at Meta, over the last 10 years, their average PE has been 32.49. And right now, it's selling at 21 times earnings. So it's selling at a very big 50% discount to its 10-year average PE. That's unusual for a company like this. And what makes Meta really well positioned for a market like this is when you look through history, what you want to do during times where there's some inflation vis-a-vis the tariffs and things like this, you really want to focus on companies that don't have massive capital spending requirements. You compare that to like General Motors, which is in a tough situation right now. If you're General Motors, you think to yourself, do I disassemble my billion-dollar Mexican plant and bring it back to America to make cars? Or do I wait to see if there's a deal with Mexico? Big plants, big equipment. Meta doesn't have any of those problems. They're selling advertising, and the capital spending for that is really low. It doesn't really cost them that much relative to a GM or companies that make big physical products.
Those profit margins are a big deal, especially in a market like this. I think the point you made about looking to see, will this company be successful right now? You don't want to just invest in cheap stocks just because they're cheap, because in this kind of a market, it might take a while for them to turn around certain companies. Other companies, like the ones you have for us today, have a good chance at success even in a down market.
Oh, for sure. And I look at it like I get to buy $1 for 50 cents. So if Meta, like literally $1 for 50 cents on the dollar, if Meta's always trading at, if we're trading at 50% lower PE, that is literally like getting to buy $1 for 50 cents. Now it might take, a year, 6 months, 2 years, whatever it is, but I'll buy $1. If I know it's going to be worth $1 tomorrow, I'll pay 50 cents for it all day long.
Yeah, that's a great outlook. Let's get to your second company that's also a good strategic pick that's very low right now compared to where it's been historically.
Yeah, Microsoft. Again, another company that has pricing power, another company that is a super high margin business, about $48 billion in average cash flow the past 15 years. So by any measure of value you want to use for this company, it's worth $3 trillion, and it's selling for a discount of that right now. So, Microsoft looks really good. But again, you have all these very fancy big shot fund managers who are just like us. And some of them just short circuit, they get very anxious. They lose their cool. They sell these things. They get scared, just like regular people. So, us being predatory investors, I like to think of it like we are like lions waiting in the brush. waiting for the prey to come by, the prey being these stocks at good prices. We just wait and wait and be patient and be patient. And when something like this or Meta comes into our strike zone, comes close, we jump.
Yeah, and jumping on Microsoft right now will come at a pretty good discount. Let's look at the details a little bit of how much of a discount Microsoft is trading at right now.
Yeah, Microsoft is trading at about a 20% discount to its average PE. So Meta's at a 50% discount to its average PE. Microsoft's at about a 20% discount to its average 10-year PE. And we've looked at this for the last 10 years. This is the average PE. It's over 31, and now it's selling for 26. PE. So it's really, 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 it's really, really good here. This is where you start buying the Metas, the Microsofts. You start nibbling, you start picking up some,
Yeah, even through the volatility that we might be seeing, like we've seen over the past few weeks, picking up little by little during this downtime is a great strategy to build wealth over time.
Yeah, and that's what I do. I start buying the way down. So, I started nibbling on Microsoft, and I'm going to be nibbling more at about $300 a share, some more at $250, and some more at $200 if it goes there.
Yeah, investors like yourself are absolutely looking for these opportunities to buy companies just like Microsoft when they are down at this lower point, and predatory, like you said, looking to make some money no matter how far these stocks might fall. And even in this kind of environment, there are some companies that are just going to do well because their costs of operations are so low and people have to keep using them. And that is just what your third pick is all about.
Yeah, and that is Visa. Visa, you think about Visa. Visa is this company that has 40% profit margins, meaning for every dollar in revenue it does, 40 cents goes right to the bottom line. That's how powerful, and the profit margins tell you how powerful of a position the company is in. The bigger the profit margins, basically the more powerful the business is competitively. So Visa currently has, it's 5% below. It's a 10-year average PE of 33. Right now its current PE is 29. So it hasn't really gotten super cheap yet, but I've started to pick this up because Visa doesn't really go below a 25 PE. It hasn't. The lowest PE it's ever gone to since it's been publicly traded is 25 times earnings. So that's how strong that company is. People just, anytime it comes down to 25 times earnings, people just grab it. Because they know that that's cheap for this stock. So I've started to nibble on Visa, and I'm looking to buy more as it comes down.
Yeah, and I think in this environment, people are looking at, okay, what companies could be impacted by tariffs? What companies could be impacted by a slow economy, inflation? Visa seems to be a little bit of a safe choice because I don't think it's too exposed to any of those risks.
That's right. Now, all these, Meta and Visa are safe choices in the sense that they're not directly exposed to tariffs. But what they are exposed to is a slowdown in the economy. Visa, Meta sees a slowdown and the advertisers spend less on Meta, so their revenue goes down. But again, they have those big, super high profit margins to protect their bottom line, to protect their investors. Visa, might see a slowdown in transactions, people spending less, but they have those super big profit margins to really keep the stock protected, to keep us as investors. Microsoft, maybe the reason Microsoft is so cheap is that they do have some tariff exposure, meaning that if you're Europe, you might say, well, you're taxing our stuff. We're going to tax services like high margin services like Microsoft. So that might be a weakness. But again, I believe President Trump is going to work this out. I believe that this is going to be fine over time, whether that happens or not. I believe Microsoft is cheap. The numbers say it's cheap historically. It's not even my opinion, just the math. So, I think these are three great stocks. And one thing your viewers should know is, in 2009, the 2009 crash, we were talking about that for a year leading up to it. And, I remember Starbucks was always a company that I wanted to own in the 90s. And I watched that thing go from 10 to 20 to 30 to 50, all the way to $100 a share, right? And it was crazy. And I was like, gosh, I wish I bought that really cheap. My goodness, I missed out on such a big winner. When the market started to crack, I remember it was 80 to 50, and it goes down to 20, and underneath $20 a share, I started buying at 18 3/4, 16 3/4, all the way down to 13 3/4, my last buy. And then bang, when the market turned around, just a year later, it was way above what I paid for it. 5 years later, it was close to $100 a share. These markets like this is how you really 10x your money, how you really build wealth over time. These are serious opportunities. For every $1,000, if you are patient, if you keep your cool, if you don't overreact, and if you stay focused and you remember your history, if you don't buy stocks when they look absolutely terrible, you will never buy a bargain.
Yeah, I know that outlook and that investment strategy has been incredibly successful for you personally and many other prominent investors throughout history. You can learn more about Dylan's outlook on taking advantage of midnight in America. Just check out his full video on 4 steps you can take right now to completely change your financial future. Just scan the QR code or click the link in the description of this video to get Dylan's full report right now and learn more about the success that he's found in these markets, just like the Starbucks example he shared. Wow, that's a really great outlook and a good example. What a good win on Starbucks. I think it also goes to kind of the final thought I wanted to give people. I think when we see so much up and down volatility like we've seen in such a short time frame, pretty much all of April, I think investors are wondering, well, I don't want to buy Meta for a 50% discount if I can get it at a 70% discount in a couple of weeks. So talk a little bit more about your strategy of, even though it might go down more, why buying now might be a good strategy for investors.
So that's somebody who's, if you think that way, you're thinking about timing the market. Trump could announce tariff deals tomorrow and this thing could go right back to $700 a share. You don't know that. What I do know is that this is trading at a 50% discount to its average PE, and that's an attractive enough entry point. Bank buying $1 for 50 cents. It might be 40 cents tomorrow, but if I offered you, $100,000 for 50 cents on the dollar, you're going to buy them. You're not going to wait till, maybe the market goes higher, maybe the market goes lower. You're going to say, I buy it. Now, tomorrow you might offer me for 40 cents on the dollar, but you're going to be happy at 50 cents on the dollar. So what? It goes a little lower. So it goes a little higher. Over the course of 6 months, a year, you're going to be fine if you're buying dollars for 50 cents. It doesn't matter.
Well, that is a good, positive, opportunistic outlook at what's happening in the market right now. I know some people are feeling different feelings.
Yeah, and I talk to a lot of these people myself. I mean, my mom, she's like, I'm sitting there with my account's down and all this other stuff. And, if she went fishing, I'd say, just go fishing. You're going to be fine. Look at this chart of the Dow. Go fishing. Turn it off. Get that anxiety. It's not worth, during a bear market, it's interesting. Person's average anxiety revs at about 3,000 RPMs in a normal market, right? Just life happens, right? But in a bear market, your anxiety revs to like 4,000 or 5,000 RPMs. You know what I mean? Just a little more anxious. You're watching CNBC a little more than you usually do. You're seeing what's going on. You can get caught up in the headlines, and all of a sudden it's like watching a tennis match. China does this, Trump does that, and Europe does this, and it's really easy to psych yourself out. And that is the key to this game, is to have the right disposition. I know people who are brilliant people, but they're terrible investors because they don't do well under pressure. And that's the thing, isn't it? Pressure changes everything. Somebody could be really, really cool without pressure, but under pressure, oh my God, it's like the Chicken Little cartoon. Oh my God, the world's coming to an end. The world's coming to an end. The world's not coming to an end. We've been through a lot worse. We're reorienting the economy, and we're trying to rebalance trade. It is in the self-interest of our partners to really come to the table as quickly as possible if you're perceiving this the right way. So, I'm bullish on America. You're not going to get hurt owning American businesses, especially when you look out at a chart of the Dow Jones. I mean, don't bet against American companies, especially when we have a tax cut coming in the coming months. I mean, it seems crazy to me.
Well, Dylan, thank you so much for sharing your take on what's going on in the market right now and sharing 3 great stocks for people to look at buying right now who are those more opportunistic buyers. Thanks again for your time today, Dylan, and thank you everyone for watching. As always, happy investing.